Welcome to the Building Web3 Podcast. Today, my good friend Ben. He is the strategy seat at Synthetix. And because it's the first time I've ever heard about a strategy seat, give us a brief explanation as to what that title means, and then we'll get more deep into your background and how you came on with Synthetix.
Hey Jax, great to be here. Thanks for having me. So strategy seat. It's recently we had a referendum, and the referendum was kind of designed around this concept of having a new council structure, which ultimately held most of the accountability and responsibility for the protocol. And as part of that structure, we set it up a lot more like maybe a more traditional organization would set up a board. Where we have external seats, which are your advisory seats and a treasury seat, and then a few seats that are maintained by core contributors. That's your strategy seat, your operations seat, and your tech seat. And so that's where I fit in, and that's what the strategy seat's role is.
We like that. So real quick, if anyone's unfamiliar with Synthetix, they can always go back to the episode we did with Kane and gang for Infinex. But if they weren't able to listen to that, talk to them a little bit about what Synthetix is and what is the mission there.
Yeah, so Synthetix is an OG DeFi protocol. It was launched in 2017 under the Haven brand, which later was rebranded to Synthetix and really is known a lot for kickstarting DeFi summer in 2020. And has lived on ever since. It's kind of it started off as a decentralized exchange and synthetic asset protocol, and then ended up spinning out quite a few products. So they spun out their front end, which became Kwenta. They spun out options trading, which was Lyra. They spun out binary options, which was Thales. And then kind of turned into what the mission turned into being this liquidity layer that underpinned DeFi. Since I've come on board, we've recently kind of started to unwind a bit of that, and we can chat about the reasoning behind that, I'm sure a bit later. But we've recently reacquired our front end, so we reacquired Kwenta, and now the kind of mission is to be an easily accessible set of DeFi tooling where individuals can access perpetual products in a very simple to understand and easy to manage manner.
Yeah, well, when you mentioned spinning out all of these different products, it reminds me a little bit of when we interviewed Cow protocol and how they like a lot of these tools and protocols came out of Gnosis or Gnosis. I forget how to pronounce it myself, but that reminds me of that. So talk to us a little bit about why the reacquisition and a little bit about why you joined the company.
Yeah, so I think I might start with why I joined and then go into the reacquisition. And so why I joined was I've been a token holder ever since the Haven ICO, where I got to know Kane and Jordan and JJ, who were the founders, and along that journey have been kind of in and out, floating around the peripheries of the ecosystem. Seeing going through the 2022 bear market, kind of same old buckle up, brace yourself and see how things go. But then kind of towards the end of last year and start of this year, as crypto started to come out of that bear market, and we started to see a resurgence in especially some of the DeFi protocols like Maker and Aave, seeing Synthetix continue to kind of tinker along and lose market value relative to others was something that I kind of came from an approach where I thought Synthetix can do better, and I had a few ideas in how to do that. And so ultimately ended up proposing a referendum whereby I'd inject myself as this strategy seat, this new council structure, where we collapsed three councils into one council, ultimately with the hope of kind of aligning, creating more alignment across key decisions. So we wouldn't have the Treasury Council managing just financials and the Spartan Council managing project direction, but not necessarily working together all that cohesively. You collapse all councils into one, where all core decision makers go into all core decisions are decided on by everyone that needs to be at the table, and ultimately responsibility rolls up to that council. And so that's kind of where I came at it from, and then the idea to I guess, bring the gang back and make turn Synthetix from this like somewhat unknown liquidity layer. I think crypto, you'll appreciate, is such an attention game. And in a market where attention kind of begets interest, and interest turns into like product adoption, Synthetix being this anonymous liquidity layer behind products was not working all that well for the brand. And so looking at how we can strengthen the brand, strengthen the product, strengthen the protocol, we decided to reacquire venues where the front end, where the end users actually ultimately interact with. And so that's why we reacquired Kwenta, which we're going to be rebranding to something to the tune of Synthetix Exchange. And why we're looking at launching a vault strategy, which was announced today. We started with the proposed acquisition of TLX, or a leverage token provider that builds on Synthetix exclusively.
Oh, and because we mentioned liquidity layer a few times, it goes back to the episode probably with Native. So the way Native worked, it's essentially DEX liquidity infrastructure. So they combined off-chain market makers with, looking at all of the different automated market makers and DEXs so they can get the best price possible. Is that essentially how Synthetix was functioning, this kind of like omni liquidity layer across chains, or? Just want to make sure we're clear on the term.
Yeah, no, historically it's operated a suite of synthetic assets. And so that's where the liquidities come from, underpinned by the SNX token, which kind of acts as the counterpart to the ecosystem. It's been able to generate liquidity whereby you can trade from any synth asset to any synth asset with infinite liquidity and no slip, which I say infinite liquidity, you need the capital to be able to make the trade. But in terms of going from like synthetic USD to synthetic ETH, because it's just Oracle-based pricing, you can effectively do it with very little price movement that is just, again, backed by that kind of pool of collateral, which is the SNX token. That has since migrated to being able to take other forms of collateral under V3. But still with that same premise whereby you can generate this kind of pool of liquidity, which is maintained by the protocol that can ultimately be leveraged anywhere.
Mm-hmm. And so essentially, if I can guess at the problem, was because you guys were functioning as this liquidity layer, but had no ability, like essentially you were hamstrung by all of the front end integrators. So if they weren't doing well, if they weren't succeeding, then by dint, you guys would, be damaged. So is the idea of the reacquisition to try to be like, hey, let's consolidate marketing efforts, let's consolidate pushing forward, and this way we can actually push forward the Synthetix protocol?
That's it. And it's a bit of a own your own destiny style play as well, whereby like if we're waiting for integrators to do certain things, or we're waiting for integrators to turn up to drive volume and drive marketing and drive effort, they've always got their own objectives, their own outcomes that they want to achieve. Some will be not solely to the betterment of Synthetix. And so for us, like having that in-house where it can align very proactively to our roadmap, and we can control that, so we control the outcomes of where we ultimately want to be, was just a better position for us to be in.
So you noticed the issue with essentially just operating as a behind the scenes liquidity layer, that you weren't able to really capture the narrative because you actually had no front end ability to implement that, or really to influence it, aside from just getting further integration partners. So talk about how you kind of recognized this issue and the proposal process, because it's quite interesting. I've actually never seen something like this happen, and I read your piece, and I was very shocked to find out it was you that wrote it. I was like, oh yeah, I read that. This is great.
Yeah, so I mean, on that part, it's one where it's kind of twofold. Like in the instance where a lot of the value and liquidity that is within the Synthetix ecosystem is backed by the SNX token, and that's minted currently at a 20%. Well, the collateralization ratio needs to be 500%. So for every $5 of SNX, you can mint $1 of stablecoin, and so that's kind of hard capped by at least, I say hard capped, but flexible, by the market cap of Synthetix. And so if we're a $100 million protocol without external collateral, which we now enable but isn't as successful as kind of the endogenous collateral that we have in terms of creating liquidity, at $100 million or at $1 billion of market cap, we could create $200 million of stablecoin at a maximum, or synthetic asset at a maximum. And so what that does is that if you're this kind of protocol that no one knows, no one really understands, but they interact with Kwenta on the front end or TLX, and they're the brands that they know, and they're the brands that if things go well, they start putting value into that ecosystem. It's at the detriment to Synthetix, which ultimately is at the detriment to the liquidity that we can provide. And so it becomes this kind of negative flywheel whereby less attention leads to lower token price, which leads to less liquidity, and it just keeps looping. And so the thought is that if we can once again own our front end, and so people won't be interacting with Kwenta, they'll be interacting with Synthetix Exchange. We'll just have better brand awareness, and we can then actually very much more easily explain to individuals who we are, what we are, and why we're attractive. And I think it's kind of that age old, if you can't explain it to your grandma, it's probably too hard. And kind of trying to explain to a non-crypto person what this kind of liquidity layer that empowers different products to leverage infinite liquidity is just kind of too much of a stretch. They're like, forget it. Like, I'm Bitcoin or Ethereum, I understand those. Synthetix is way, way, way down the kind of technical stack for them.
Yeah, no, that makes complete sense. And then if I wasn't mistaken, I believe there was a competitor product that was offering like very lucrative rewards. So to a degree, it made it relatively difficult to compete. I could be completely wrong on that, but kind of talk to us a little bit about like the competitive landscape now that you guys are really pushing forward and trying to get more visible.
Yeah, so our core products, certainly a perpetual protocol or derivatives market. And so I think you might be referencing Hyperliquid, who have been kind of the newest, shiniest player in the space, and have certainly been very successful in attracting liquidity and attracting trading volume. For us, we stand by kind of a history, and we've seen a lot of protocols come in and come out and come in and come out. And so having just been around for so long and battle tested through two bear markets now, two pretty savage bear markets, we see that as something that standing the test of time in crypto as a real feature. And so, look, whilst there's a narrative around these new token launches and new metas, and that's always going to be something that we kind of have to compete against, there have certainly been aspects that they've done very well, and these are some of the things that we need to kind of buckle down as this reboot happens post referendum, and really do an introspective on what are we doing different, what are they doing well, how can we improve our product, how can we return to more prominence when it comes to not just reputation as an OG DeFi protocol, but as a leading perpetual market, leading perpetual exchange within the decentralized ecosystem or decentralized network of protocols.
And now that you've secured the seat, and it seems like you guys will be reacquiring some, partner protocols, talk to us a little bit about the vision you see 6 months, 1 year into the future as to what you guys are hoping to accomplish.
Yeah, so again, I think it's really about becoming a very simple, intuitive, and easy to use exchange. And I think there's been a lot of complexity, and just naturally there is complexity when it comes to derivatives markets. And so that's why we're kind of going down this path of, okay, if we own the front end, we can own the experience. So we can tailor that to how we feel the user can best interact with it. About providing, at the minute, we have fragmented liquidity across several chains. So we're live on Optimism, Base, and Arbitrum. We're soon to be live on Sui and Solana. So they're integrations that are coming up. But ultimately, each instance under the current design has its own liquidity that it needs to attract, and it has its own volume that it has to attract as well. And so what we're looking at moving towards is kind of a unified location where volume and liquidity will sit, and that will likely be our own chain, which is on the OP Super chain called Snacks Chain, which is live already but with limited functionality. and allowing people to be able to interface kind of from where they are and end up ultimately in a single location of deep liquidity, where we will have order books, which we don't have to date, and kind of move in that direction where we're providing as close to I guess, a centralized exchange experience as we can, given that even in the world of decentralized exchanges, the fact that they're a fraction of what the centralized exchanges do, we're kind of still chasing that pipe dream of hopefully being in the ring once or if I should say, or once people do move from decentralized onto more decentralized rails.
Yeah,
and so that's kind of the ultimate vision. The other part to that is like providing those simple to access products. And so that's where vaults fit in, whereby vaults will hopefully be this part where people can interact with derivatives without necessarily knowing they're interacting with derivatives. So just by automating strategies and providing access to strategies that traders would not be able to likely be unable to do themselves without a level of sophistication, just kind of providing that access and that opportunity where, for example, you can have a leverage token that automates the rebalance of that leverage, or you can capture the basis trade just by depositing into a vault as opposed to holding the underlying, shorting the perpetual contract and monitoring the funding rate that you get paid there.
Yeah, and I'll try to summarize as best as I can. So it seems like there's a consolidation. You guys have split liquidity across multiple different chains, actually only to go to additional chains. There's actually a finite limit as to the amount of synthetic assets that you can produce based off the market cap. So you're trying to consolidate onto a specific app chain within Optimism super chain, and then hopefully, because assets and liquidity flow easily within the super chain, instead of somebody going to say like Aerodrome, they might choose to go to the Synthetix, I forgot the name, the Synthetix exchange, operate there.
Yeah, exactly. Right? It's about right. And it's kind of this idea of, as you say, just like unifying liquidity. So there's a better trading experience off the end of it, because if you have 10 thinly traded venues, it's much harder to kind of cold start, get off the cold start for each of them than it is to kind of build one deep liquidity pool that people can trade very freely against with limited slippage and good execution.
Yeah, I'm quite inspired. People can go back to the Aerodrome episode, but how they've essentially been able to beat out Uniswap, which is not necessarily an easy feat if you look at somewhere like Arbitrum. In terms of, is that generally the goal? It's like, hey, take one chain, be like the best in class there, and then because you're on the super chain, people will be like, hey, I want to go trade perps, I'll go to this chain. Do we think it will be a relatively chainless experience, or do you foresee people like bridging directly to your chain and kind of going to you guys specifically for perps?
Yeah, I mean, the hope is we can reduce the friction as much as possible. And I think the bridging process, whether people like to admit it or not, is a friction. And so whether or not we can abstract that in some way, or the super chain, just by virtue of kind of having the interoperability across all super chains or super chain instances enables that. We'll see, I guess, over the coming months or years. But then also potentially looking at solutions like Infinex, whereby they abstract all that. And so a user can be on any chain that they support, be it Solana, be it Optimism, Arbitrum, Mainnet, Base. But ultimately they can interact and plug into any application that's supported within Infinex, and they don't even know where their liquidity is. They don't need to know. They just know that there's a value within their account. And everything's abstracted in the back end by Infinex, for example. Mm-hmm. And so that's also an avenue where you kind of overcome this issue of creating friction in a multi-chain world.
Now, when you guys were functioning as the unified liquidity layer, your main user was developers, because it was essentially a B2B product at that point. Now you guys are shifting into a B2C product. I guess the goal then is just purely user growth. That probably simplifies things a little bit.
Yeah, so I think there's kind of two aspects. We're not necessarily stepping away from B2B. We're just also stepping into B2C. And so where we want to control our own destiny, as I mentioned before, whereby if we need a front end, we can build it ourselves as opposed to wait for integrators, or if we want to launch new products, we can launch them ourselves as opposed to hope some integrator turns up or try and incentivize an entrepreneur to build it themselves. But saying all that, the hope is as well that because we are integrators ourselves, we can better empower other integrators that want to leverage Synthetix by just providing them with SDKs so they don't have the development overhead of having to interact with our contracts. And on top of that, by integrating ourselves, we'll hopefully understand the pain points of integrators a lot more so that ultimately, again, we can build a better experience for people to much more easily plug and play into Synthetix as opposed to kind of get up the development curve.
Yeah, well, the old eat your own dog food approach.
Yeah.
So in terms of, because you came in from like a community perspective, are you guys relatively like fixed in the general roadmap going forward, or are you guys still kind of taking community feedback? What's the general perspective, or you guys relatively have a roadmap where you're like, hey, we're going to execute this roadmap for the next like 6 to 12 months and then see how it goes?
Yeah, so I think, like in crypto, you can never sit on a roadmap too long. And I think testament to that is in that initial referendum that we talked about earlier, there was a 2025 vision and roadmap outlined. That was from me sitting outside the tent. Having come into Synthetix, that's changed. There was not the expectation that we'd acquire Kwenta from when I was on the outside, and that kind of came up throughout just the process of learning more and getting closer to the integrators like Kwenta and understanding their situation better and understanding the levers that Synthetix could pull to help grow. And so I think whilst the roadmap will probably continue to be fluid as this market iteration takes place, I think it'll be interesting to see how it goes with the changes in the US and what shape that takes. But I think needless to say, like we have directionally where we want to go in terms of being that unified or having a unified liquidity layer that people can tap into from wherever they are. But then on top of that, like being able to provide the products that support that and provide people with easy, simple access to potentially complex strategies is something that's very attractive to us. And they're kind of our North Stars when it comes to how do we actually drive users, adoption, and ultimately volume and open interest through Synthetix. But kind of falling back on that, how we get there is still very much it's not going to be a straight road, and I'd be naive to say that I have all the answers right now.
Sure. Well, it's quite interesting. I like the idea of Vault in terms of like when I talk about users, I usually am talking about like retail users, unless the episode is very specific to institutional. Could you see a world in which you guys really target institutional clients, like people coming on to the blockchain, or you think that maybe they're not as interested in the decentralized aspect of what you guys offer?
Yeah, certainly. I mean, I think if we can get to a stage where our products are like feature comparable with some of the centralized exchanges, we can certainly have that conversation. I'd argue to say a lot have been, and depends what type of institution you're talking about, whether it's crypto institution or non-crypto institution.
I usually think like BlackRock, Morgan Stanley, where I used to work.
Yeah. So I think for those guys, I think it's probably still a little way away.
Yeah.
I think they'll start to test this stuff. I think maybe increasingly, given some of the regulatory clarity that we hope will come in the next 6 months. But I think like in terms of actually getting them on-ramped and on board, it's like realistically, it's probably just a step further than their risk committees are probably comfortable with, I'd say at the minute, given some of the issues about who your counterparty are and needing to, at least at the minute where they seem to sit, is like whitelisting contracts and whitelisting addresses to engage with contracts. And I think in kind of under the veil of full decentralization or kind of open permissionless programs or protocols, it kind of is antithesis to that. And so I think, look, at the minute, it's about them learning what these systems do and being able to interact. I think we're a lot better shot at moving some of the I guess, more nimble institutions like your crypto native ones for starters, who I don't think are huge proponents of decentralized derivatives at the minute. They're probably still largely on centralized exchanges, but then also some of your more nimble like hedge fund managers and kind of asset managers that are in the space that probably solely use centralized exchanges at the minute. I think we can hopefully get to the stage where we can open that conversation and kind of hand on heart say we're at feature parity and you should come check us out.
I love it. Well, I'm very excited to track your guys' progress. This is if you guys pull it off, this will be a great comeback story, which you don't often see in crypto. A lot of projects just unfortunately die or just become ghost chains. So I'm very excited to see. And we have a good community here. Is there anyone you're looking for help for? Are you guys looking for devs? Are you looking for marketers? Are you looking for anything people in the audience can reach out to you about?
Yeah, I mean, like we're always open to ideas. At the minute, to give you an idea, we're kind of we've grown from 18 to circa 30. So we are growing. We are kind of hungry as this bull market comes. And I think, look, the excitement for us and the excitement for the crypto industry at the minute is that the regulatory environment is changing, and that's kind of greenlighting a lot of opportunity that hasn't been there the last year. And so we're kind of pedal to the metal, going full scorched earth on this to make sure that we can capture every bit of benefit we can through this little purple patch that we think's on its way.
Great. Well, everyone go interact with Synthetix and definitely keep abreast of all of the exciting things that they're doing over there. And then finally, where can people interact with you online? You have Twitter or LinkedIn you want to call out?
Yeah, so I'm on Twitter, SelamayB. That's going to be a mouthful, but
I'll put it in the description. Don't you worry.
Yeah, cheers. You can find me on Twitter. I'm also in Discord, the Synthetix Discord. My handle's Fenway, like Fenway Park in Boston, and I'm often trawling through there every day, if not every couple of days, if not every day. So reach out, say hi. And looking forward to meeting a lot of your community.
Absolutely. Well, Ben, thank you so much for coming on the podcast, and to everyone else, let's continue building the future of Web3.